Hello and welcome to today's video, which is called S&P 500 Minicrash. Following the last 3 trading days, it sure must have felt so. And given that we lost 4365 that easily and could not return above it on Powell's speech, pretty much sealed the fate as much as the break below 4330. But before I talk the daily chart, I hope that you are subscribed on my site, because really the daily articles form the basis on my site. I am now spending way more time in the intraday channel and on the overall analytical content, so please make sure that you are reading it delivered into your mailbox just like the way it should be, the precise moment it's published. And also talk to me on Twitter and follow me on Telegram for timely notifications and whatever opportunities these two channels bring. So let's start with the big picture. Given the Mideast situation deterioration, we hadn't seen comparably bearish S&P 500 turn, just unlike the week before, where there was a panic selling. There was hardly any panic selling this Friday. Okay, we got the 4330 break and also took out the low 4280s. You may remember that I talked 4278 as the level that could be the very last one to stop the sellers. And it did not, and it was pretty obvious from the absence of a dead cat bounce before the US markets opened Friday that there would really be no such a bounce. Conversely, the one and only intraday rebound that we got was readily sold into before the session was over, and stocks did cut with ease through the 200-day moving average. Big picture, this was the key deciding point. Powell saying that he is not sure whether the rates had been already restrictive enough, long enough, high enough, sufficiently to beat inflation. And inflation is still sticky, it's not retreating. Oil prices are not exactly retreating, but they are surging on the Mideast troubles. And if you are a Trading Signals subscriber, you also have access to my Telegram channel, which is designed for these real assets, where I had been talking the daily path, which had been working out well. Alright, oil is now taking a little breather at the end of Friday, but it would be reverting back above 88, 89, 90 pretty soon. So, markets are adjusting to Fed's policy of higher for longer and the necessity to keep those rates elevated. And so far, only when the rate cuts would be initiated, only these bets are changing. Currently, it seems that June is the month for the first rate cut. Well, remains to be seen. Let's see. I'm not convinced, but I count on early second half. It could be a couple of months later, but it's too early to say. Why? Because the real economy had been really resilient. That's why I'm counting on the Fed to not throw in the towel that easily, even though we would go into recession in the beginning of next year. I mean, in the first half, probably late winter, could be early winter, but probably late winter. Let's see. Fed would have to be still restrictive, and that's why these rising rates had been the key souring element this week for stock market. The economy is still strong, but slowly on its rendezvous to meet recession. As well, when it comes to credit spreads, they are widening, some would call it bear widening, and the yield curve is normalizing. Pretty much what is consistent with this late stage of the business cycle. So let's now dive into the chart. My 4-60 target had been reached very fast, and it did not hold. I predicted the break of the 200-day moving average on the intraday channel. No need to be panicking, rushing to close our short calls. And when it comes to tech and big tech, these would be leading the downswing. They would not be in the safe haven position. And when they take turns with cyclicals, who is going to be declining faster? And we see such a steep reversal as we saw in Russell 2000 following Wednesday. That is a sign for caution, because the bears are in the driver's seat. And Google and Microsoft are key earnings coming next, and I expect that the strength would be sold into. So that's my big picture warning, which I would be of course fine-tuning in the intraday channel. Here you see a snapshot from our intraday channel, whereby we on the left side discuss the potential market scenarios, and I recap the Smashing Friday results where I had helped clients bring gains with short DAX and S&P 500 calls, which made up for no real upswing attempt, bringing maybe 20, maybe 25 points Thursday or Wednesday. This did not materialize, and it was necessary to change the tune, and this was the final positive end to the trading week. And my final gift was about continuing the downswing, that I maintain the bearish positioning. I have posted this at the top of the intraday rebound that did not manage quite to get to 4280. So that's the kind of discussion, the kind of calls, the kind of extra value that comes on top of my expanded daily articles that you get with our work. So, final disclaimer, and have a nice weekend.